IPO ready do you feel today? And you know, what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
Yeah, so I think we've been lucky to have like an exceptional CFO and finance team, and I think we were joking with the team the other day. I don't think that there's a company with such a short life cycle that's completed like such a rigorous financial due diligence for this round. We did like a very rigorous financial due diligence that I think candidly probably did not happen pre-2021 in the internet ecosystem.
And was that because of the expected IPO?
Yeah, no, it was just because, like, in general, the ecosystem is now a lot more wary about these things, right? And it's a large amount of capital. People want to do their due diligence, which we encourage, right, as a company. Like that's great. And we've got, let's say, Big Four stat auditor. We built exceptional controls, and so I think one thing I'm most proud of is that we've controlled the company very well. Like even the boring stuff, right? Pure reconciliations, excellence on invoicing, vendor ledger management. Inventory controls, all of that, we've been able to build depth on. But I think so that's one. I think we're pretty close to being, from a controllership perspective, like a decently well-run public company. Obviously not the best in class, but decent. I would say that the focus for us in terms of going public is really, once that bucket gets closed, I honestly think it's just like a matter of when do we see the right sweet spot of, hey, we're inflecting, we think that we're going to get into, harvest significant amounts of, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, it's a commercial strategic call. Yeah. I think that happens in, probably sooner than even I anticipated. Yeah. And, we're a fast company, so if we take a call to go public, we'll go public very quickly. But yeah, I think 2026, potentially even late 2025 is a realistic timeline, and our focus would be build excellence on controls and make sure that you have a high, it's not about profitability today, it's about, do you have, because, break-even-ish is not what people are betting on. They're betting on, can you generate 300, 400, 500 million dollars of free cash flow in like a reasonable period of time. And so once we see that inflection point, we'll say,
I know you're doing the rounds of the investor conferences, Aadit, at Goldman Sachs, Motilal Oswal. What are the questions that they're asking you? Are they excited about the anticipated IPO?
Look, I think, fortunately there is excitement. I think, obviously the public guys have less detail on our bottoms-up numbers versus the private guys do. I think, one thing I'd say for sure is that, meeting the ecosystem 2021, when we were just getting started versus 2024, I feel like there's just a much deeper understanding of what quality internet companies look like and what bad internet companies look like. And the questions that are being asked are much deeper, right? So today you'll have discussions on, okay, if the atomic unit of your business is the store, what's the return on equity mechanics of the store? What's the return on equity mechanics for every customer that you're acquiring? What's the CLTV to CAC on that? So you're having really thoughtful, deep conversations, and we've really been excited about the way the public markets not just like understand our business, and I think obviously they're richly valuing this space, but it's not coming from just like some random thought process, right? It's actually coming from like an understanding of the mechanics of this business financially, but more importantly, the value for customers.
And a growing conviction in the fact that this business will actually work and take off, because that wasn't the case 2 years ago.
For sure. Look, I think I would say it's half the business model, but also half the execution, right? I think like folks are, there would have been a very real world 2 years ago when people had skepticism on this business model, and it would have failed. Like if we didn't execute, and it's not just Zepto, it's all the players in the space that did well. We've really just executed a very difficult business model. And we're getting rewarded for that.
Why do you think that's worked? I mean, of course, the big one is labor, and the fact that we enjoy this significant labor arbitrage. Is that the biggest piece in ensuring that this model works here?
It's not really the labor. I mean, if you look at like if you look at all the costs as a percentage of sales, and you allocate like some of the facts that the margins are a little bit lower, it actually like gross margin percent. Like people say, oh, in the West, they've got high labor costs as a percentage of sales. They also have high margins, right? So, FMCG today would be 1.5x higher margins there, right? So it's not really that delta. What actually see, economics and product market fit, and sometimes we miss that in the investor world, is 100% customer backwards, right? We believe in the Amazon principle of, customer value and shareholder value have zero conflict in the long term. Like they're exactly interlined, right? And so, for us, it's really the customer value proposition. I think Indian customers love hyper-local, right? They love the ability, to have flexibility. People have smaller people don't have pantries in India. They've got smaller household sizes. The penetration of four-wheelers is low. People like buying fresh, which is naturally much higher frequency. All of these things mean that versus the West, where you do have more disposable income, larger household sizes, you've got more processed food versus perishable food. All of that means that in India, the product market fit of the customer is so strong. And what is that translating to in terms of economics? And this is the big blind spot. We're in this position today where we do so much throughput per square foot. We do multiple times more throughput per square foot than even the best offline commerce player in the country. That today, rent as a percentage of sales in any of our partner dark stores is sub 1% or 1-ish%, right? If you look at that for offline grocery, that would be like
higher.
5x of that. That is a percentage of sales. And so that's leverage. And that leverage is not coming from me doing something or the team doing something. It's because customers are giving us so much value in ordering that we get that throughput. And so we really focus on the customer product market fit. If you deliver for the customer, they'll reward you somewhere in the P&L always. That's the way that we look at it.
Well, speaking of the big changes that have happened for you over the last few years, I mean, I think the Huron rich list is out this morning, and you and Kevalia make it to that list, not as billionaires, but the youngest on that rich list. I mean, as a 21-year-old, how does this fit in your scheme of things in life? Does it make life harder for you?
Yeah, look,
or easier?
Yeah, look, I mean, I tell you candidly, Shereen, both KV and I, we genuinely, like, at this point, it's really never has been and it never will be about the money. Like, we just love building. Like, we grew up as kids building, like, silly stuff.
You're still a kid.
Yes, still a kid, exactly. But as an even younger kid, right, when I was 13, 14, 15, we loved, especially KV, coding, we loved building basic stuff. And we just love what we're doing every day, so we're super excited about it. And look, even to this date, we've not, really gone crazy. Like, we're not saying, oh, look at us, here we are, we've made it, let's, fly first class, all this. We don't do any of that because it's just like, what's the point? Because, at the end of the day, like I said, there are two things that get me excited waking up in the morning. One is, we are building an awesome product for customers. We have to get better, but we're building an awesome product for customers. And two, we could really actually help the internet ecosystem in India. And I think that's a win-win for everybody, right? And it's not just us, right? It's some of the quality companies you mentioned, like a PhonePe, like a Zomato. All these companies, if we nail it over the next 3-4 years, we need to have like, a China moment in a way, or like a early 2000s US moment where we just like start creating $100 billion companies, $70-80 billion companies. Not like some big grand, like, silly vision. It's like bottoms up, we can actually build these companies. I think we've got a shot. A couple other companies have a shot. Do
you think we're 5 years, 10 years out from that?
I think I would say 5 years. I mean, 5 years out from that. Like, if that happens, and I've when raising this round, I've spoken to like very large institutional, public and private investors, and I can tell you all of them are on the cusp of saying that if we see this level of DPI getting created at scale in India, we are all in. Right? Obviously, that's still happening. Obviously, you can see what's happening with FIIs. It's not going great, candidly, right? But if they start seeing like, hey, this seems like Alibaba, this seems like Nubank. Then they're going to go all in. I mean, you will see the internet ecosystem realistically. If today we've got like 2 million jobs in the startup ecosystem, 1 million jobs, that number will go to like tens of millions without exaggeration. So it's like we feel that, all of us as founders, we should just like leave all the distraction, the money, all of that stuff. It doesn't matter. If we just roll up our sleeves, build it, the country will benefit.
But, does it make it harder to build trust? And I'm not talking about work, but I'm talking about personally, socially. Does it make it harder for a young person like you?
Look, I think the good news is that I barely have a social life. I can say the same thing.
Is that by choice?
Zepto. I'm married to Zepto, right? That's the thinking. And I'm in the office.
Do you want to continue that way?
Yeah, I do. In the office we're building in Bangalore, I'm going to just live in the office, like without exaggeration. Get a bed there. Life is going to be good.
So no work-life balance for you, huh?
No, not for us. I mean, we love what we're doing. Like, it doesn't feel like, it feels like life, right? This, I feel like I am Zepto in a way, right? But yeah, no. So I think, socially, I don't really have a good answer to that question because I've not really gotten there in this phase of life. But personally, I don't think really much has changed. My family still treats me the same way that I am. If my room is a mess, they still give me shit for it and all of that. So it's still the same.
Have things changed in the way that investors interact with you, for instance, or just public perception in general? Because people forget you are 21. I mean, has that changed on the back of what you've been able to do with Zepto? I mean, 2 years ago when you walked into a room versus today walking into a room, how does that feel for you?
I think the benefit of being in Mumbai is that nobody really cares about startups here, like as much as they do.
Which is why you're going to Bangalore.
Yeah, unfortunately, but we love Bangalore. But it's Mumbai really humbles you because everybody only here cares about cricket and Bollywood and politics, right? Nobody really cares about internet. But you go to third wave in Bangalore, KV gets a lot of attention in a third wave cafe in Bangalore, right? So it's no, I think honestly speaking, it hasn't changed much. I think I can't really put my finger on it. I don't think that there's we walk into a room and there's more gravitas. I don't think we come off as we don't wear crazy stuff. We don't look particularly crazy. I mean, I think most people when they probably see me, they feel a bit underwhelmed. Similarly with KV, we're disheveled and not that exciting. So no, I think it's fine. There's a small subset of the population that knows us, like the business folks, the startup folks. And that's a very small subset. Ordinary people rightfully and gladly don't care about us, and that's great. And we'll keep it that way. So that's the way we look at it.
So let me end by asking you, is there a whiteboard in the office somewhere where there is a line that encapsulates the ambition, the dream that you have for Zepto? What does it say?
There is. I have two whiteboards in my office. No, it's like I mentioned, we just want to, the ambition is we want to build something crazy for customers, and we want to build a truly exceptional internet company in India. And I know I keep saying that again and again, but trust me, Shereen, if we do it, if a few other companies do it, it's going to be awesome. It'll be a Flipkart moment all over again in the internet ecosystem. And this time, much higher quality companies will get built. And that's what we want to do. So that's written in my room. I have a little note in my room which says, don't mess it up. Don't mess it up.
Aadit Palicha, it's been an absolute pleasure. Thanks so much. Congratulations. We wish you all the very best of luck, and thanks very much for speaking to us today. Well, that's it then on this special edition of Young Turks. From all of us here on the team, goodbye. Thanks for watching. Do stay tuned. There's a lot more coming up on CNBC-TV18.